This is our Forex blog for December 5th, 2012, and like we do most days, we want to find the statistically strongest currencies and buy them versus the weakest ones, and we want to sell the weakest ones versus the strong. Our Build Your Own Trend Currency Meter uses multiple different statistical tools we have on multiple different time frames that measure and compare each currency to every other one. Whether it's a percentage of currencies going up or down based on a certain statistical model, or some of our tools measure the intensity. So let's say the New Zealand's going up against 70 to 100% of other currencies, and it's doing so with above average intensity. That's a trend that's likely to continue. And so when you see a currency that's strong like this, and then the pullback phase has very little weakness, usually you get a half an hour to an hour and a half of weakness, and then the trend's going to continue. So you can, if a little after 4 here, you're anticipating another trend up, which it does. Unfortunately, it only lasts about 20 minutes, and then you have about 15-20 minutes of weakness, and then you have a couple hours of strength. That's how this works. You want to trade the strong ones versus the weak. So let's look at the dollar and yen, which most people trade against. The New Zealand's strong, the dollar and the yen are weak. The yen is a little bit weaker than the dollar. But it doesn't matter either way. You want to buy the New Zealand dollar, New Zealand yen. And you can see on this, by focusing on buying this, you're taking the buy signals, it goes up 10, 15 pips, pull back, buy signal here, it goes up. And then when it finally broke out over the bars, or the previous day's high, it had a really nice move for this relatively low volatility currency. You can see yesterday, the high minus low is only about 35 pips. Today, it had a 50 pip day. So, and the currency meter showed that it was a very high probability trade. Let's take a look at the New Zealand yen. Strong New Zealand, weak yen, and very similar situation. This pullback phase right here, you might have went long, made a little bit. This trade right here, this next pullback right here, you can see that basically if you bought every little dip in the market, it went up, went up, went up. This little dip here went up. And you can use our chandelier stops for entry and exit. I also highly recommend drawing the fibs on the chart, and it gives you an idea of where the next profit target is. You can see it went right to the 1.618 fib target. In this dark gray background level, I spend 30 minutes every night or more doing Fibonacci analysis, Fibonacci retracement, showing the Fibonacci profit targets, and those show up in dark gray. So this is a very high probability maximum high for the day. That's what I thought last night, and it makes a great profit target, and most days a pretty high probability place to look for sells. This is a new tool called the Smart Trader, and it shows you all the key support resistance areas. I posted on our Facebook page today about this in action, many of them live right as I took the trade, so I proved that I caught a winning trade in those instances. You can see all the key support resistance areas right on here, along with very fast containment band levels. For instance, here is the 5-minute containment band using our super fast digital signal processing based technology. You basically want to scale into a sell, buy. So you can see this one worked, buy here it worked, buy here it worked. Scale into sell here, it made a little bit, here made a little bit, here it made a little bit, scale into sell, made a little bit, buy here it went up, sell here it went down, sell here it went down. And just to prove that this works, let me just showcase it in some other currencies. Look, you sell here and went down, you scale into a trade here, it went up, scale into a buy here, it went up, scale into a sell here, it went down, buy right here, it went up. And this is just an effective tool on every single chart. Scale into a trade here, goes down, you made money. You can see. And some of the times when you scale into a trade, you only make 3 to 5 pips, but it adds up. This one right here pulled back 10, this one up 10, this one up 8, this one up 8, this one went up 5. And the more volatile currencies, the better. Let's look at the CAD yen. Buy, went up, went up, went up, down, down. Obviously this one here failed. Nothing works 100% of the time, but you're watching these currencies. There was a big yen move here on all the pairs. Obviously, you have to be aware when the currency is super, super strong. But if you put all of the key support resistance levels on your charts, you couldn't watch the chart. It'd have so many lines and confusing reasons to buy and sell. It would confuse the hell out of anybody, including myself. So this allows me to put this right on the left-hand side of my charts, see where all the key levels are. If I'm looking at the chart and I want to buy, if I really think it's super strong, it's going to go up, I might put on, for instance, a 30-minute range projection study and look to buy there at the 30-minute statistical low. For instance, if you click last bar only, it's going to showcase that level right over here on the right. So this level right here, 132.53, would be a relatively safe place, or anywhere near that, even a few pips above if it's super strong, to be buying, knowing that if the trade goes a little bit against you, it's likely to pop back. And if you do what I do, I scale in progressively, so that usually if I get into my second or third scale in position, price only has to move 5-6 pips my way and I'll pass break even.